You hear it all the time, investing is the key to building wealth. Even with a small amount of money, you can begin investing and set yourself up for a brighter financial future. Every expert investor was once a beginner just like you. Starting small is not only possible, it's actually a smart strategy. Think of it like planting a seed. It may seem insignificant at first, but with consistent care and time, that tiny seed can grow into a mighty tree. Investing works the same way. Your small, consistent contributions will grow over time, thanks to the magic of compound growth. Compounding is like a snowball effect for your money. When you invest, you earn returns. Then, those returns earn their own returns. Over time, this creates an exponential growth curve that can turn small sums into significant wealth. The younger you start, the more time you have to benefit from this incredible force. Imagine two investors. One starts at age 25, the other at 35. Even if they both invest the same amount, the early bird will come out way ahead, thanks to compounding. Time is your greatest ally in investing. Now let's tackle some common myths that might be holding you back. Myth number 1. Investing is too complicated, but investing doesn't have to be rocket science. There are simple, straightforward options available that make it easy for anyone to get started. Myth number 2, investing is risky. All investments carry some level of risk, but not investing at all is the riskiest move of all. You're essentially letting inflation erode the value of your money over time. The key is to educate yourself, start small, and choose investments that align with your risk tolerance and financial goals. Imagine setting off on a road trip with no destination in mind. Investing without clear financial goals is a lot like that aimless road trip. It lacks direction and purpose. Before you even think about specific investments, take some time to define what you're working towards. Are you saving for a down payment on a house? Planning for a comfortable retirement? Maybe you're dreaming of starting your own business or traveling the world. Whatever your aspirations, identifying your financial goals is the first crucial step. Having clear goals helps you determine how much you need to invest, how long you have to reach your target, and what level of risk you're comfortable taking on. Without this clarity, you're essentially flying blind. Setting financial goals isn't just about dreaming big, it's about creating a roadmap for your financial future. When you set specific, measurable, achievable, relevant, and time-bound goals, often referred to as SMART goals, you're much more likely to stay motivated and on track. Let's say your goal is to retire comfortably at age 65. A SMART goal would be, I want to retire at 65 with $1 million in my investment portfolio. By breaking down your goals into smaller, more manageable steps, you'll be able to track your progress, celebrate milestones, and stay motivated even when the going gets tough. Remember, investing is a marathon, not a sprint. Now that you have your goals in sight, it's time to create a financial roadmap to guide your journey. This roadmap is essentially your personalized plan for achieving your financial objectives. A well-structured budget is the foundation of a solid financial roadmap. Start by tracking your income and expenses for a few months to get a clear picture of where your money is going. Then, identify areas where you can cut back on unnecessary spending and redirect those funds towards your investment goals. Once you have a handle on your cash flow, you can allocate a specific portion of your income towards your investment goals. The key is to make saving and investing a non-negotiable part of your budget. Just like you wouldn't skip paying your rent or mortgage, make your financial future a top priority. Alright, so you've got your goals set, your budget in check, and you're ready to start putting your money to work. Now comes the exciting part, choosing your investments. We're going to keep it simple and focus on low-cost, beginner-friendly options that can help you build a solid foundation for your portfolio. Investing isn't about picking the next hot stock or trying to time the market. It's about making smart, long-term decisions that align with your goals and risk tolerance. Think of it like building a house. You wouldn't start with the roof, would you? You'd lay a strong foundation first. That's what we're doing here, exploring the building blocks of a diversified investment portfolio. Diversification is key because it helps to spread risk. Section 2. Index funds, your diversification powerhouse. One of the easiest and most effective ways to diversify your portfolio is through index funds. Think of an index fund like a basket of stocks that tracks a specific market index, such as the S&P 500. When you invest in an S&P 500 index fund, you're essentially buying a tiny piece of all those companies. What's great about index funds is that they offer instant diversification. Instead of trying to research and select individual stocks, you're getting exposure to a broad market segment with a single investment. Plus, index funds are typically very low cost, which means more of your money is working for you. This makes them a great set-it-and-forget-it option for long-term investors. Section 3. ETFs. Riding the market wave. Exchange-traded funds, or ETFs, are similar to index funds in that they offer instant diversification and low costs. However, ETFs trade on stock exchanges like individual stocks, giving you the flexibility to buy and sell them throughout the trading day. This means you can react quickly to market changes, taking advantage of price movements as they happen. Like index funds, ETFs can track a wide range of assets, including stocks, bonds, commodities, and even specific sectors like technology or healthcare. This allows investors to target specific areas of the market or broader economic trends. This makes them a versatile tool for building a diversified portfolio tailored to your specific investment goals. Whether you're looking to invest in emerging markets, sustainable companies, or high-growth tech stocks, there's likely an ETF that fits your needs. Just like with any investment, it's essential to do your research before investing in an ETF. Look into the fund's performance history, management team, and underlying assets to make an informed decision. Pay attention to the ETF's expense ratio, which is the annual fee charged to manage the fund. Lower expense ratios can help you keep more of your returns over time. Also, consider the ETF's holdings and investment strategy to ensure they align with your risk tolerance and investment objectives. Some ETFs may focus on high-risk, high-reward assets, while others may aim for more stable, long-term growth. By understanding these factors, you can choose ETFs that complement your overall investment strategy and help you ride the market wave with confidence. Section 4. Micro-investing, making every penny count. Now, you might be thinking, but I still don't have a lot of money to invest. That's where micro-investing comes in. Micro-investing apps make it possible to invest your spare change, literally. These apps connect to your bank account or credit card and round up your purchases to the nearest dollar, investing the difference. It might not seem like much, but these small amounts can add up over time, especially when combined with the power of compound growth. Micro-investing apps are a great way to dip your toes into the world of investing without feeling overwhelmed. They typically offer a curated selection of low-cost ETFs and index funds, making it easy to create a diversified portfolio with just a few taps on your phone. Now, we've covered a lot of ground, from setting financial goals to exploring different investment options. But there's one more crucial ingredient for successful investing that we need to talk about: patience. Investing is not about getting rich quick schemes or trying to time the market. It's a long game, and like any worthwhile endeavor, it requires patience and discipline to reap the rewards. Think of it like planting a tree. You wouldn't dig it up every few days to see if the roots are growing, would you? That would only damage the plant and hinder its growth. Investing is the same way. The key is to trust the process and give your investments time to grow. It's also important to remember that investing is not always a smooth ride. The market will inevitably experience ups and downs, periods of growth followed by periods of decline. These fluctuations are a normal part of the economic cycle, and they shouldn't scare you away from investing. In fact, market downturns can present opportunities for long-term investors. When prices drop, you're able to buy more shares of your investments at a discount, which can lead to even greater returns when the market eventually recovers. The key is to not panic and sell your investments out of fear. Remember, investing is a marathon, not a sprint. One way to stay the course is to automate your investments. Most financial institutions allow you to set up automatic transfers from your checking account to your investment account on a regular basis, such as monthly or bi-weekly. This way, you're consistently investing regardless of market conditions, and you're less likely to be swayed by emotions. Another helpful tip is to focus on your long-term goals. When market volatility arises, remind yourself why you're investing in the first place. Keeping your eyes on the prize can help you weather the storms and stay committed to your financial future. Remember, investing is a journey, not a destination. As you progress on your investing journey, it's important to acknowledge and celebrate your milestones, no matter how small they may seem. Did you reach a savings goal? Did your investment portfolio hit a new high? Take the time to acknowledge your progress and pat yourself on the back. Celebrating your wins, big or small, can help you stay motivated and reinforce positive financial habits. It also serves as a reminder of how far you've come and the progress you're making toward your ultimate financial goals. By starting small, staying consistent, and remaining patient, you can build a solid financial foundation and achieve your financial dreams. And hey, if you found this video helpful, don't forget to give it a thumbs up and subscribe to our channel for more awesome how-to tips. You've heard it before, investing is a marathon, not a sprint. Building real wealth takes time. It's about making smart, consistent decisions over the long haul, not chasing quick profits or trying to outsmart the market. Think of it like building a skyscraper. It takes years of planning, construction and dedication to reach those impressive heights. You wouldn't expect a skyscraper to be built overnight, would you? The same principle applies to investing. It's about laying a strong foundation, brick by brick, and gradually working your way up to your financial goals. The key is to stay focused on the long term and not get sidetracked by short-term market fluctuations. In today's hyper-connected world, it's easy to get bombarded with financial news, expert opinions, and market predictions. It seems like everyone has an opinion on where the market is headed next. But here's the thing, a lot of it is just noise. Trying to keep up with every market fluctuation or follow the latest investment fad is a recipe for stress and potentially costly mistakes. Imagine trying to have a conversation in a crowded room with everyone talking at once. Instead of trying to absorb everything, focus on tuning out the noise and sticking to your investment plan. Trust in the process and avoid making impulsive decisions based on short-term market swings or the latest hot stock tip. Now I know what you might be thinking, this all sounds great, but I'm still new to this whole investing thing. It can be overwhelming, right? The jargon, the charts, the constant market fluctuations. It's a lot to take in. What if I make a mistake? Listen, everyone makes mistakes, especially when they're just starting out. It's a natural part of the learning process. Even the most successful investors have stories of their early blunders. The key is to view mistakes as learning opportunities, not failures. Each mistake is a stepping stone towards becoming a more knowledgeable and confident investor. Think about learning to ride a bike. It's a perfect analogy for investing. You probably fell a few times before you finally got the hang of it, right? Those falls were part of the process. But did those falls stop you from trying again? Of course not. You got back up, brushed off the dirt, and tried again. You dusted yourself off, learned from your mistakes, and kept practicing until you were cruising down the sidewalk. Investing is no different. It requires persistence and a willingness to learn from each experience. There will be bumps along the way, but that's okay. These obstacles are just part of the journey. The most important thing is to keep learning, keep growing, and keep moving forward. Every bit of knowledge you gain adds to your confidence and capability. There are tons of resources available to help you along the way, from books and articles to podcasts and online courses. These resources can provide valuable insights and strategies. Don't be afraid to ask questions, seek guidance from trusted financial advisors, and continue expanding your knowledge. Engaging with experts can offer personalized advice and clarity. Remember, investing is a lifelong journey of learning and growth. It's not about getting rich quick, but about building wealth steadily over time. Embrace the process, and you'll be amazed at how much you can achieve. Celebrate your small victories along the way, as they are the building blocks of your financial future. So there you have it. We've unpacked the essentials of starting your investing journey, even if you're starting small. It's all about taking that initial leap of faith and believing in the process. Remember, the most important step is the first one. It's the foundation upon which you'll build your financial future. Don't let those small numbers in your bank account hold you back. Everyone starts somewhere, and it's the consistent effort that counts. Every seasoned investor was once in your shoes. They faced the same uncertainties and challenges, but they persevered. Remember that seed we talked about? It's a symbol of potential and growth. Well, it's time to plant it. Nurture it with knowledge, patience, and dedication. Start by setting clear financial goals, creating a budget, and sticking to it. This will give you a roadmap to follow. Explore those beginner-friendly investment options we discussed, whether it's index funds, which offer diversification, ETFs, which are flexible and cost-effective, or micro-investing, which allows you to start with just a few dollars. There's a path for you. Each option has its own set of benefits, so choose what aligns best with your goals. And hey, we're here to support you every step of the way. You're not alone in this journey. If you enjoyed this video and found it helpful, hit that like button and subscribe to our channel for more awesome how-to tips and tricks. Your engagement helps us create more content that can guide you through your financial journey. Investing might seem daunting at first, and it's okay to feel overwhelmed. It's a natural part of the learning process. But with the right knowledge and a little bit of effort, you can navigate through the complexities. You can achieve incredible things. Imagine reaching your financial milestones and celebrating your successes. Your financial future starts today. Let's do this. Embrace the journey and take control of your financial destiny. Speaking of achieving incredible things, are you ready to unlock your full potential? We've talked about growing your wealth, but what about growing your mind? A sharp memory and laser-like focus can be game changers, not just in investing but in all areas of your life. Imagine being able to absorb information like a sponge, recall important details effortlessly, and stay focused on your goals even amidst distractions. Sounds pretty amazing, right? Well, it's within your reach. Want to know how to improve your memory and focus today? Click the link in the description below for more information on a product that can help you supercharge your cognitive abilities. Don't wait to invest in yourself. Unlock your full potential and start achieving amazing things today.